Here's the deal. The 4.4% GDP number expected is one of the most political growth numbers I can remember in a long time. The administration is setting this up as proof they have sought that their tax cuts are working, and critics, they chime back. They say there are several one-off factors that seem likely to push up the GDP data. Here's the bottom line. I like this number from Pantheon. Quote, every major component of GDP growth, with the exception of housing investment, looks to have supported growth in the second quarter. That's important. There will definitely be some tax cut impact in the number, and you look for those in consumer spending and better business investment. But there are also going to be some one-off items, a bit for everyone in here. You're going to have a Q1 adjustment, which will be interesting. The BEA has been trying to fix that problem of weak Q1 GDP, so it may mean that some of the second quarter stuff gets put back into that 2% number. You have this pre-tariff buying and selling. In other words, everybody's trying to get their stuff before the tariffs came in, both on the export and import side. That could flatter the trade number and the inventory numbers. And you have had a pretty big boost in government spending. That could stick around for a while, but ultimately would be a one-off. Let's look at some of the records. We're talking about a history here. The last best quarter we had, or plus 4%, was back in Q3 2014. That was 5.2%. The strongest, most recent year, 2015, that was 2.9%. So look for I think we may even beat that this year. The current annual rate, I took the last 4 quarters average and get it running at 2.8. That's pretty strong. Moving on here to the right, the best quarter ever, Q1 1950.
What the heck happened?
16.9%.
How they measured things?
I don't know of anybody. I think it had to do a lot with sort of post-war stuff that was going on there, and also you had the people coming back. Wait, there was one more there. This was the best year ever. Was 8.7% in 1950.
16.9%. There has to be something other than.
I will have to do a little more history on that. I will, though. Bottom line is this economy is growing more strongly right now. It's probably not a 4% economy, but the good news for everybody out there is it's not a 2% economy anymore either. What I want to show you are these Fed probabilities, and this tells me that the market is seeing this not as a 2% economy either. What they're doing here, I'll help you read this, 92% probability of a quarter-point hike in September, 66% chance in December, and what's new here, pardon me, is the 50% probability of the next quarter-point hike now being in May. That's been moved up from June. So they were looking for that 50% probability or greater in June. Now they're starting to accelerate some of those hikes over time. So I think the market is starting to believe it's a stronger economy. I don't think the market's going to buy into a 4% number, but, you know, it could be a 3% number, and that's a pretty good accomplishment.